Hey guys, it's Varun. I'm excited to do this video because we're going to talk about something I know a lot of you struggle with, and that's how to deal with trading losses. So, let's get into it. Here's what we're going to cover. We're going to cover the real cost of losses, the psychology behind losses, the 5-step framework, some practical tools you can use for resilience, and the key mindset shift. Now, before we talk strategy, let's talk truth. I want you to picture something I'm sure you've all experienced. Think about a loss you've taken in the past. You don't even have to think hard. It comes rushing back instantly. The setup looked perfect, you'd done your analysis, and you were confident. You clicked buy, and then the market just laughed at you. Maybe it was one trade that wiped out a week of gains. Maybe it was a series of losses that made you question everything: your strategy, your intelligence, your decision to ever get into trading in the first place. Whatever your version of that story is, I need you to hear this. Every serious trader has that story. Every single one. But here's the difference between traders who quit and the traders who go on to build real, consistent wealth. It's not their win rate. It's not their strategy. It's not even their capital. It's how they process and respond to losses. So today I'm going to give you the exact framework that elite traders use to turn losses from setbacks into setups to your next level. We're going to cover the psychology, the process, and I'm going to give you some practical tools that you can use right now. So before we jump onto the next phase, the next sector, I want to show you this quickly, which is the trader mindset spectrum. On the left, in red, we have the reactive trader, and on the right, in green, we have the responsive trader. Now our job as a trader is to go from reactive to responsive. A reactive trader is someone who acts on emotion immediately after a loss. Is someone who changes strategy after every bad trade. Is someone who measures success by single outcomes. Is someone who revenge trades to make it back. And is someone who constantly blames the market, the news, or bad luck. Now on the other end, we have the responsive trader. And this is someone who pauses before acting after a loss. They evaluate the process, not just the outcome. They think in probabilities and not certainties. And they reduce size to build confidence. They also journal, review, and adapt systematically. Now, I want to talk about the real cost of losses. And I'm not talking about the dollar amount. I'm talking about the invisible costs, the ones that don't show up on your P&L statement. So the first one is confidence erosion. Every time you take a loss without processing it correctly, you deposit a tiny bit of doubt into your subconscious. Now, 1 or 2 of those you can absorb. But string together 5, 10, 20 unprocessed losses, and your confidence doesn't just dip, it collapses. And a trader without confidence isn't a trader. They're a gambler frozen by fear. Now the second one is behavioral drift. This is where traders get wrecked without even realizing it. After a loss, you start making small adjustments, moving stop losses, doubling down, and taking trades outside of your strategy, and you tell yourself it's just this once. Each individual adjustment feels logical in the moment, but what you're actually doing is abandoning your edge, the one system that actually works, because your emotions hijacked your rational brain. The third invisible cost is opportunity blindness. When you're carrying the emotional weight of recent loss, you literally cannot see good setups. Research in behavioral finance confirms this. Loss aversion doesn't just make us risk averse after losses, it makes us cognitively impaired. We miss entries, we see risk where there is none, and essentially we become our own worst enemy. So let's go over that again. The 3 costs of unprocessed losses. Take a screenshot if you need to. Invisible cost 1 is confidence erosion. Each unprocessed loss deposits doubt into your subconscious. After enough of them, your confidence doesn't just dip, it collapses. Invisible cost 2, behavioral drift. You start making small adjustments. Each one feels logical. Together, they silently abandon your edge, the system that actually works. And invisible cost 3, opportunity blindness. Loss aversion creates cognitive impairment. You miss entries, you risk where there is none, and you become your own worst enemy. Now, moving on to the psychology behind losses. Before we can fix how we respond to losses, we need to understand what's actually happening in our brains when we lose money. There's this thing called the prospect theory. In simple terms, it shows us that the pain of losing money is almost twice as powerful as the pleasure of gaining that same amount. Now, this isn't a weakness, this isn't a flaw, this is your brain's ancient wiring working exactly as designed. It was built for survival, not for the financial markets. The problem is that the financial markets, they require you to operate in direct opposition to your survival instincts. As you know, the market rewards calm, rational, probabilistic thinking. However, your brain rewards fast, emotional, loss avoidance thinking. And these two things are fundamentally incompatible unless you train yourself to bridge the gap, which is what we're going to be doing in this video. Now, there are 3 core psychological traps traders fall into after losses. I'm going to name them so you can recognize them in yourself. The first one, I'm sure you've all heard of it, is revenge trading. This is where the loss triggers a primal need to make it back. You start taking trades based on emotion, specifically on anger and urgency. You increase your position size, you ignore your rules, you feel like you're being decisive and confident, but in reality you're not. You're running hot and the market ends up punishing you for it. Trap number 2, analysis paralysis. Now, this is one I see a lot of traders struggle with, and it's the opposite to revenge trading. You become so afraid of another loss that you stop trading altogether, or even worse, you second guess every setup to death. Good trades pass you by while you sit on the sidelines, convincing yourself you're being cautious, but in reality, you're letting fear make your decisions for you. And trap number 3, narrative hijacking. This is when one loss becomes a story about who you are. You say to yourself, I'm bad at this, I always mess up, or I'm not meant to be a trader. These narratives feel true because they're delivered in your own voice from inside your own head, but they're fiction. They're your bruised ego creating a false story to make sense of pain. So, we'll go through them again. Take a screenshot if you need to. Trap number 1, revenge trading. The loss triggers a primal urge to get it back. You increase position size, ignore your rules, and take trades based on urgency and anger, not analysis. The feeling is decisive, but the reality is you're running hot. Trap number 2, analysis paralysis. Fear of another loss freezes you completely. You second guess every setup until good trades pass you by, while you tell yourself you're being cautious. The feeling is you're being careful, but the reality is you're being driven by fear. And then trap number 3, narrative hijacking. One loss becomes a story about who you are. You say to yourself, I'm not cut out for this. And when you deliver it in your own voice from inside your own head, these feel true, but they're fiction. The feeling is you're being self-aware, but the reality is it's an ego defense. Now we can get into the work. This is a 5-step framework I want you to implement every single time that you take a significant loss. So step 1, I want you to pause immediately. The moment you realize you've taken a loss, and especially a painful one, I want you to stop trading completely. Like, close your platform if you need to. The worst decisions in trading history are made in the immediate aftermath of a loss. Your cortisol starts spiking, your judgment's clouded, and your risk tolerance has gone completely haywire. Give yourself like a mandatory cooling off window, minimum like an hour, or even the rest of the day if need be. This isn't a weakness, this is elite level discipline. You see, Formula 1 drivers, they don't re-enter the race on a flat tire, they pit, and so should you. Step number 2 is separate the outcome from the process. So here's a truth that can take a long time to accept. A good trade can lose money, and a bad trade can make money. The outcome does not determine the quality of the decision. Okay, I'm going to repeat that again. A good trade can lose money, and a bad trade can make money. The outcome does not determine the quality of the decision. Your job after every loss is to ask yourself one question. Did I follow my strategy? If the answer is yes, if you took the trade according to your system, you managed risk appropriately, and executed your plan, then the loss is simply the cost of doing business. Remember, markets are probabilistic. Even the best setups fail. So what I want you to do is accept the loss, log it, and move on. But if the answer is no, if you broke your rules or you sized up emotionally, then the loss is valuable feedback. It's telling you something about where your discipline was cracked. And that information alone is worth more than the money you lost on the trade. So, if a loss has occurred, did you follow your trading system? Answer, yes or no. If yes, it's the cost of doing business. If no, then it's valuable feedback. Step number 3, conduct a structured post-trade review. So, get your journal out. And yes, I said journal. If you're not keeping a trading journal, you're operating without a compass. Every consistent professional trader keeps detailed records of their trades. Not just the numbers, but the reasoning, the emotional state, the market context, and the outcome. So, for every losing trade, I want you to answer these specific questions, and preferably in writing. First, what was my thesis going into this trade? Second, at what point did the trade invalidate my thesis, and did I act on it or ignore it? Third, was my position sizing correct, appropriate for the risk level? Fourth, what was my emotional state before I entered? And fifth, what would I do differently, specifically and concretely? I want you to answer these questions with detail and get real specific on your answers. And then step 4 is recalibrate your risk. So after a significant loss or string of losses, one of the smartest things you can do is reduce your position size. And this is only temporarily. This isn't about a punishment. This is not a punishment. It's about rebuilding confidence on a smaller and more manageable scale. Think of it like a professional athlete returning after an injury. They don't come back and immediately perform at full intensity. They ease back into it. They rebuild trust in their body, in their movement, and in their capability. I want you to do the same. You need to rebuild trust in your system and in your decision making before you scale back up. Reduce size during a losing streak, not to save money, but to save your psychological capital. Remember, confidence is a resource and it needs to be protected. And then step 5 is return with a clear mind, not with vengeance. So, when you return to trading, you need to return with one objective only: execute your system. Not to make back what you lost, not to prove anything, just to execute cleanly and precisely the process that you know works over time. Set a daily loss limit before you open any positions. If you hit it, you're done for the day, no exceptions. This single rule has saved more trading accounts than any strategy ever has. Remember, discipline isn't something you find in the moment, it's something you build into the structure of your trading day, so you never have to rely on willpower when emotions are running high. Now, let me give you the actual tools you can implement today. Practical, tactical habits that you can use to stay mentally and emotionally sharp. So, tool number 1, the pre-market mental reset. Before you open your chart, every single morning, spend 5 minutes in what I call the pre-market reset. This has 3 components. First is review your trading rules. Actually read them out loud if you have to. Second is check your emotional temperature. Are you coming to the market calm and focused, or are you carrying stress, frustration, or urgency from outside of your trading? And 3, set your intention, not a profit target, but a process target. So something like, today I will wait for confirmation before entering, or today I will honor every stop loss without exception. The traders I've worked with who do this consistently actually have better decision making under pressure, because they've primed their brain for discipline before the market demands it. Tool number 2 is called the post-loss protocol. So I want you to create a physical checklist, write it down, print it out, and stick it next to your screen. It should say something like, stop trading, breathe, journal a trade, evaluate process, not just outcome, reduce size if needed, and then return only with calm intention. This protocol becomes your guardrail when emotions want to take over. The moment you feel that surge of frustration or urgency after a loss, you reach for the checklist. It helps you build trust in your process and not your feelings. Now, congrats if you made it this far into the video, because here's a nice valuable freebie I'm going to offer you. The third tool. Tool number 3 is the Mindset Masters Discord. So, as you know, isolation amplifies every emotion. When you're the only person who knows about your losses, they grow in the dark. So I've created a free Discord server called the Mindset Masters, a place where you can debrief after rough days, not to complain or not to find someone to blame the market with, but to actually gain perspective, get objective feedback, and remember that losses are a universal experience among serious traders. I'm going to be providing a lot of value in there. We can chat, we can connect with more like-minded people, and overall just create a better trading experience. I'll leave the link in the description below this video, and I look forward to seeing you in there. Now, finally, the mindset shift. Most traders, they treat losses as evidence that they're failing. The best traders treat losses as tuition fees for the most valuable education available. I'm going to repeat that. The best traders treat losses as tuition fees for the most valuable education available. Think about it this way. Every time you take a loss and review it properly, you're collecting data, or data depends where you are in the world. I say data. That makes your edge sharper. You're learning where your system has gaps. You're discovering your own emotional triggers. You're building the kind of hard-won experience that no book, no course, no YouTube video, including this one, can give you. Even Ray Dalio, the founder of the world's largest hedge fund, said, "Pain plus reflection equals progress." That's the formula. Not avoidance, not anger, or not paralysis. Pain plus reflection. See, the traders who ultimately win over the long term are the ones who develop what I call a loss relationship. They know losses are coming, they plan for them, they process them, and they use them. George Soros is another one who lost hundreds of millions of dollars on individual trades, and he went on to become one of the best traders of all time. Paul Tudor Jones has spoken openly about huge losses early in his career and what he learned from them. And by the way, these aren't people who have never lost. These are people who had a better relationship with losing than anyone else. So to summarize this, and to give you some homework, I want you to remember losses in trading are not optional, they're part of the deal. Every strategy has drawdown, every trader has rough patches, but what separates the ones who build real wealth from the ones who blow accounts and walk away is not talent, it's process, discipline, and emotional mastery. Here's what I want you to do right now. One is take the 5-step framework and write it down. Actually write it down on paper. Then start a trading journal if you haven't. Even a notebook is fine, just somewhere where you can journal your trades, emotional state, and things like that. And then lastly, I want you to create the post-loss protocol checklist and put it somewhere where you can see it while you're trading. And number 4, the next time you take a loss, because it's going to happen, I want you to catch yourself before you reach for revenge, before the narrative hijacks you, before the fear locks you up. I want you to pause, breathe, and say, this is data, and I know exactly what to do with data. Because now, after this video, you do. So, if this video gave you real value, do me a favor, hit the like button, leave a comment telling me about a loss that turned into a lesson, and subscribe if you haven't already. I'm going to be putting out content like this weekly, designed to make you sharper, more disciplined, and a profitable trader. Thank you for watching, and I'll catch you in the next one.